Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord and also the chat and YouTube for your questions and comments. So please feel free to post. And hello, Gray. Hope you had a great 4th as well, long weekend. Glad you're here. All right, my agenda for today. I want to go over news items, economic data that came out today, and events for this afternoon, the rest of the week. Then I'll go through my positional analysis, and then I'll review a few setups, and then we'll go to the live market. So just to note, the FOMC minutes come out at 2 p.m. today, and wherever I am in this agenda, I will stop and we'll take a look at the live market. All right, so first of all, news items. Today, the factory orders came out at 10 a.m., a little bit lower than expected, and as I just mentioned, FOMC minutes come out at 2 p.m., and we'll stop and look at the live market at that time. Tomorrow, PMI data comes out at 10 a.m., and then Friday, the big event other than the FOMC minutes is the employment report that happens on the first Friday of the month. That comes out at 8:30 Eastern Time. All right, so big events for the week, the main events: FOMC minutes today at 2 p.m., and then the employment report at 8:30 a.m. on Friday. All right, let's get started. Start with positional analysis now. And this is the S&P 500 futures in Bookmap. Before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to an SPX chart. This is a 30-day, 1-hour chart in Thinkorswim showing just price and key levels. And let me point out some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is from the options market, and you can get this information any number of ways. And I just I actually have a ThinkScript that does this, and you can also just look at the an SPX options chain, and that is how I get the lower and upper daily expected move, shown with the dashed light blue lines. So right now SPX is trading in between the lower and upper daily and weekly expected range. Let me point out some additional levels on this chart, Spotgamma levels. First of all, there's the put wall at 4,200. And note this level did increase from last Friday. It was at 4,000, I believe, last Friday, and now it's up at 4,200. That's the strike with the largest net negative gamma that can be expected to act as support, and of course not really in play today. The next level is the volatility trigger, and that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to increase volatility. On the other hand, like SPX is trading now, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue volatility. And the next level of interest is the absolute gamma strike. That's also at 4,400. That's the strike with the largest absolute gamma. And then the call wall at 4,500. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. And that level did increase from last Friday, as well as the volatility trigger. So looking at the numbers from last Friday, the volatility trigger put wall and call wall for SPX all shifted higher. And note the really the range, I think, in play for this week at least is the 4,400 to 4,500, and that lines up very well with the lower and upper weekly expected move. All right, so that's SPX. Now let's take a look at ES in Bookmap. And I have a column of cloud notes here. These are my own cloud notes. And I'm showing, actually before I do this, I forgot to look at one other chart. This is SPX today. Actually, let me, give me just a moment. Let's zoom in on just today. So this is showing SPX for today in a 1 day, 1 minute chart, showing the levels that are in play for today. Note the lower daily expected move. This is for SPX, acted as support. SPX gapped down and then continued higher, did not quite touch this level, and then the 44.50 level has definitely been in play for today. And welcome Karma FX and John D and YouTube. Glad you're here. All right, so this is back to ES now. Let me point out some levels. So as I was saying, I have my own column of cloud notes here. There's the SPX 44.50 level. That was noted as a resistance level in the Spotgamma AM Founders Note. Right now there's about a 37-point difference between ES and SPX, so that's why the SPX 44.50 level is shown at 44.87. That accounts for that difference. I'm also showing SPY levels. There's the SPY 443 volatility trigger, and it has been acting as support earlier today and also just in the last few minutes. And then note the SPY 442 large gamma 3 level acting somewhat as support this morning. That was kind of a launching pad for the move higher at the open, the aggressive move higher at the open. So those are the levels in play, SPY and SPX. And then here's the ES, lower daily expected move. That's a little bit different from the SPX. lower daily expected move. So those are the levels in play for today. SPX, I talked about the shifts in levels. For SPY, the volatility trigger shifted higher. This is based on from Friday. The put wall actually shifted lower from 430 to 420. Call wall shifted higher from 440 to 450. And the absolute gamma strike for SPY remains at 440. So now the call wall is up at 450. So the important takeaways from these shifts in levels: SPY call wall shifted higher to 450, and the SPX call wall shifted higher to 4,500, raising that ceiling for potential movement. Right, so again, the key takeaways: the ceiling now for SPY and SPX has moved higher. All right, let's take a look at Nasdaq now. And that's the NQ futures. Before I take a closer look at this chart, I want to take a look at a QQQ chart so we can look at levels that are in play for today. This is the QQQ 1 day, 1 minute chart. Let me point out a couple levels. So for QQQ, the put wall remains at 330, and the call wall has shifted higher from 370 to 375. And if you recall from last Friday, the QQQ call wall was at 370, and that was a brick wall. Price could not get past that level, and there were large sellers in there at the 370 level. But now that potential ceiling for QQQ has also moved higher to the 375 level. And then here's the QQQ volatility trigger at 369, and that was a launching point for price this morning. So both those levels have shifted higher: volatility trigger and call wall for QQQ. And right now, this 370 level that acted as resistance last Friday, and I think Monday as well, is now acting as support. Well, let's go back to NQ futures. So for NQ, I have, again, my cloud notes here. That's the QQQ 372 level acting as resistance. And there's the launch from the QQQ 369 volatility trigger, and also the NDX 15,125 level. And right now there's about a 155, 156 point difference between NQ and NDX. So I've got NDX, QQQ levels, as well as the big round numbers for NQ marked here, these zeros in the 50s. So again, here's the 370 level, this kind of cluster of levels. This is the NDX 15,200 level. That's the absolute gamma strike call wall for NDX. And then the 15,350 level. And again, also the QQQ 370 level. That was the call wall last week. So those are the levels in play for the S&P 500 and the Nasdaq. We'll talk about setups in a few minutes. And John D asked us, do those levels show up automatically? No, they don't. Let me show you what does show automatically. If you, let me go back to NQ. So if you subscribe to Spotgamma, you can use the cloud notes. That's what I have here. The problem with these is Spotgamma does not keep track of the current ES to SPX difference. So this level is not correct. That's why I'm using my own cloud notes. And SCS, can we look at the Dow? I'm sorry, I don't trade the Dow. I don't look at it. I just trade and look at S&P 500 and Nasdaq. So sorry about that. I'm looking at these indices, index products are heavily influenced by the options market. I don't know about the Dow. All right, so I've talked about the S&P 500, the Nasdaq, shifts in levels, and then how I'm looking at levels on these charts with my own cloud notes. And I use an add-on that's available in the Bookmap marketplace called Price Lines. All right, let's take a look at some additional information that I look at in my planning process. First of all, I'm going to take a look at the Vanna model. This is for SPX, and I'm using this to get a sense of how market makers will be hedging with changes in price and applied volatility. So what this chart is showing is market makers' delta notional and how that changes with changes in price. Delta notional shown on the vertical axis and price shown on the horizontal axis. There are two curves on this chart. This first curve, the light gray, is showing how market makers' delta notional changes with changes in price only. And this is showing as price increases, market makers will have to sell futures to hedge their delta exposure, and that's typical of a positive gamma environment. Then the purple curve is adding implied volatility to the equation. This is showing how a market maker's delta notional may change with changes in price and implied volatility, and that change in delta with the change in implied volatility is the Vanna effect. Hence the name of this, the Vanna model. That's a second order Greek. So what this is showing is, again, market makers, as price increases, market makers will have to sell futures to hedge their delta exposure. Although the purple curve is showing that they will have a little bit less delta notional to hedge as price increases. Then on the other hand, if price decreases and implied volatility increases, market makers will have significantly more delta to hedge. They will have to sell futures to hedge their delta exposure. So the left side of this curve is typical of a negative gamma environment, and the right side is typical of a positive gamma environment. Let's take a look and see where SPX is trading now. I've got SPX at 44.48. So let's find that on this chart. So that's right around here. So what this is showing is if price increases, there may be a slight tailwind, but if price continues to increase, market makers will have to start selling futures to hedge their delta exposure. Then on the other hand, if price decreases, market makers will have to aggressively sell futures to hedge their delta exposure, helping to fuel the move lower. All right, that is SPX, and SPX right now is in a positive gamma. Market makers' position on the gamma curve for SPX is positive. Actually, at the beginning of the day, it was positive for SPX, SPY, NDX, and QQQ. So let's quickly take a look at SPY. Vanna model. Gamma notional slightly is less positive, so this gamma curve is a little bit more typical of a slightly less positive gamma environment. Right now I've got SPY at 443, just above the volatility trigger, and again showing there may be a slight tailwind if price moves up just a little bit, not much, but a significant headwind or a fuel for price to move lower as price moves lower. And I'm just watching the purple curve there and how it shifts to the left and to the right of that line. And there's the Vanna model for QQQ, pretty similar to SPY. All right, let's take a look at some data. What I'm going to focus on here is gamma notional. So this is just what I was talking about. Market maker's position on the camera curve. This provides some numbers for SPX, SPY, NDX, and QQQ. Note all these numbers are positive. They did increase from Monday. So again, market maker's position on the gamma curve at the beginning of the day today was positive for all these indices, index products. All right, let's take a look at some setups. Well, so first of all, let me point out my thesis for the day based on this information. So I've talked about the shifts in levels higher, especially the call walls for SPX, SPY, and QQQ. Call walls, potential ceiling, upper end of the trading range, all shifting higher. That's bullish. And then also the positive gamma environment for all the index products. And based on that, I was looking for a lower volatility day, more of a trading range rather than a trend day. So bullish, directional bias, and looking for a tighter range today, smaller range, based on the positive gamma environment. So that was my thesis for the day. All right, let's take a look at some setups now. We'll start with the S&P 500. And I want to start by looking at what options traders are doing or have been doing today and what they're doing now. So this is the Spotgamma hero chart. This is showing price for SPX with a white line and the hero signal in the purple line. So this hero signal is showing a combined signal for options trades and market maker hedging activity for SPX, SPY, XSP, and ES futures, all into one combined signal. So again, showing market maker options traders are taking positive delta positions, and market makers have to buy futures to hedge their delta exposure. So let's take a look at the individual components of this. Primary components, first of all, SPX, and net for the day, that's actually negative. And note, SPX options do trade before the cash open, so that is the cash open right there. That's when it really gets going. But this number is slightly negative. So net for the session, options trades for SPX are negative delta. Let's take a look at SPY. And for SPY, they're positive, 2.16 billion. And then for ES futures, also positive at 1.1 billion. All right, let's go back to the combined signal now. I'm going to zoom in on this. Sorry, trying to adjust it, so I'm just looking at the sorry. All right, so this is beginning of the cash session here. And note that call buyers are in here in force as soon as the market opens at 9:30 a.m. Eastern Time. We'll take a look at what they were doing in just a minute. One thing that I want to point out, I want to show a chart from Monday. So keep in mind, this is Monday, pre-holiday, half-day session. So again, Monday, half-day session, close at 1 p.m. Eastern Time. And this is showing that traders were buying calls and buying puts on Monday. And this is a pretty significant number here for calls. 3.15 billion for a pre-market, pre-holiday half-day session. So that is significant. Traders were in there Monday buying calls, and that to me adds to the bullish narrative, at least for today. So that's, again, this is Monday, half-day pre-holiday session. All right, so today, let's take a look at what traders are doing. Separate out puts and calls. And note, right at the open, tripping all over themselves to buy calls. And note the number here at 4.3 billion positive. Excuse me. So they're also buying puts today, but the call buyers so far, for the most part, have been winning. 4.3 billion positive versus 1.3 billion negative. And that nets out to right around positive 3 billion. And note the strong correlation between price action and hedging flow. All right, let's take a quick look at Bookmap, and I've just got 2 or 3 minutes before the FOMC minutes come out. So let's go to Bookmap, go back to ES, all right, so here's ES. I'm going to zoom in on the morning. So we know that traders were buying calls at the open. They were buying calls on Monday. And one other thing that stands out here is this large iceberg orders. That's shown by the rising light blue line in the subchart. Let's see if we can find that order. Scroll just a little bit. So here at this point of view, it is aggregated into this number here. It looks like about 1,476. And this blue line here, light blue line, shows that a series of smaller orders here shown in this chart accumulated into one block order there, but showing 40 transactions. And if we zoomed in closer, those would appear. And note, after that flurry of buying right at the open, now the blue line shifted lower. Traders continue to buy calls, and then buy stop orders as well as cumulative volume delta. Buy stop orders and then cumulative volume delta, aggressive buyers with market buy orders, help to fuel the move higher. So there's the setup in the morning, definitely long. All the confirmations in the order flow and Bookmap, as well as Hero. All right, it's 2 p.m. Let's see if there's any reaction to the FOMC minutes. So far, not much. Alright, so not much of a reaction so far. Take a look at Nasdaq. So now it looks like a positive reaction. Let's see what options traders are doing. So we'll go back to Hero. So there's somewhat of an uptick in the Hero signal. Traders taking positive delta positions. Let's go take a look at Nasdaq. So while we're looking at this, I'm going to zoom in on the morning session and note the initial move higher, positive. Hero signal, options traders taking positive delta positions starting about 5 minutes after the open. And that now has started to shift negative about 10:30, 10:40.
Iceberg ESU3 CME sell 403.
All right, let's go back to Bookmap. And I just got an alert in my ear about a large iceberg sell. And that was for this right here. Large trader in there, 3,000 contracts selling right at point of control. And that was absorbed by market buy orders shown by that green volume dot. Let's take a look at Nasdaq. I want to take a look at the morning session. So we know initially traders were taking positive delta positions. Here's the launch at the cash open. Aggressive buyers, wrong tool. Note the rising cumulative volume delta, and that was also fueled higher by buy stop orders, shown with the rising yellow line. Alright, so D&T Matter says, note that location had the same amount of ice at 12:15-ish. Let's take a look at that. That could be interesting. Alright, so what he's talking about And there's the 3,000 contract iceberg order. And then right at that same level, that is showing 2,900 in two separate transactions. So there's a large trader that wants to sell just to right around 44.86, between 44.85.50 and 44.86. And thank you very much for D&T for pointing that out. Let's go back and check what and see what options traders are doing. Go back to the S&P 500. So looking at Hero in the afternoon, there are a couple of ways of approaching this. I think Brent at Spotgamma has talked about just scrolling in like I'm doing now. And another approach is to change the rolling window. So right now I'm looking at a cumulative value for the entire day, and I can change that rolling window period. So it's like changing to a shorter moving average. And now that is showing just starting around 2 p.m. On net, options traders are taking positive delta positions. They are buying. And that's pretty clear from looking at the still sticking with the 1-day rolling period. All right, I'm going to take a look at a couple of stocks from this morning, and then we'll get back to the live market. First is Google. And note the 120 key gamma strike in play. Let's take a look at Bookmap. So obviously traders were taking positive delta positions at the open on Google. Take a look at Bookmap. Go to Google. And there were several stocks that like this, just like the Nasdaq, took off like a rocket at the open. And again for Google, 120, the key gamma strike. All right, the next is Meta. Even more so of a launch higher. 300 is the call wall for Meta. That is a potential upper end of the price range. And Meta traded higher, about 10 points in a matter of an hour this morning, from the 9:30 open, from the 287 to the 297 level. So anybody who bought calls this morning in Meta had a great day. All right, let's take a look at Hero for Meta. Separate out puts and calls. So this is clearly showing that traders were buying calls this morning, shown by the rising orange line. And really about 10:30 as price leveled off. They stopped buying calls. And price has flattened out now, increasing a little bit. So puts, they're also selling puts, but that's not significant. Not significant for compared to calls. 18.9 million versus 343 million. All right, so that's Meta. The next is Microsoft. And note the call wall in play for Microsoft at 340. So in the morning, hero rising, traders taking positive delta positions, and price did breach the call wall and is now trading lower. So hero rising, price rising. Let's go take a look at Bookmap. There's Microsoft. And Karma FX, thank you very much. You're welcome. Thank you very much for your kind words. Have a great day as well. I've got another 20 minutes. Hope you'll be able to stick around. All right, so there is Microsoft. And another blast higher at the open. 340 call wall. Price did breach that and now is trading lower. Then finally, NVIDIA is one more that I want to take a look at. And again, blast higher, not much liquidity. It was up about 4 points in just a matter of a couple minutes. Let's go take a look at Hero. So Hero, looking at the total signal, a little bit more choppy than the other stocks that we looked at. Let's see if we can separate out puts and calls and get more clarity. And yes, we can. Especially in the morning in the first 30-40 minutes. So after that initial blast higher, NVIDIA giving some pullback opportunities to go long as traders were buying calls. All right, let's go back to S&P 500 and see what traders are doing now. And if anybody has any stocks that they want me to take a look at, please let me know. All right, so far really not much reaction from the FOMC minutes. Let's go take a look at Bookmap. Go back to ES. So it looks like the larger trader with the large iceberg order may be getting his way.
Iceberg ESU3 CME sell 569.
Yeah, there it goes. 4450, SPX 4450. Acting as resistance, and more iceberg orders coming in. So it took a while. Normally the algos parse the FOMC minutes in just a matter of seconds. All right, so Florid's Garage says TNX up over 2%. Let me take a look at that. All right, TNX, for those who may not know, that is the yield for the 10-year note. So up over 2% now. The yield for the 10-year note is 3.94%. So up over 2% today, around 80 basis points. And House of Wisdom asks, what do you think the direction of XOM is? I don't know. I don't follow XOM. I don't have it in Bookmap. We can take a look and see if it is in, it should be in Hero here. Let's take a look, see what options traders are doing. So very light options volume in XOM. So sorry, I just don't have much clarity there. It looks like there is this large block order did come in. Let's see. So there was a larger block order, someone buying puts. That shown that vertical line there. So that's bearish. Again, I would have to look at order flow on Bookmap, and I just don't have XOM in Bookmap. Let's take a look at Nasdaq, see what it's doing. So really for the day, after about 10:30 a.m., Hero continues to trend down. So options traders continue to buy puts and sell calls. Notion of value for calls and puts, both negative. Traders are selling calls and buying puts in Nasdaq. And House of Wisdom, you're welcome. Back to the total signal. And S&P 500 also trending down. Let's go back to Bookmap. So definitely a break lower there. Iceberg orders giving an early warning of a potential move lower. And note this liquidity that was in the order book earlier at 44.80. And that was in play earlier today. Let me zoom out just a little bit. Right here, yeah. So that liquidity in the order book at 44.80 was in play earlier today, so apparently acted as support, and then they pulled that liquidity and now have come in with sell orders at 44.80. And order flow definitely.
Stop ESU3 CME sell 270.
All right, got another warning in my ear about a stop order. There it is right there. 500 sell stop order, helping to fuel the move lower. Right there. Price now down just above the lower daily expected move. Note the bearish order flow here stops. Yellow line, sell stop orders like we see here, helping to fuel the move lower. Also iceberg orders. There's another one, 1800. So larger traders with iceberg orders, smaller traders maybe with stop orders, all helping to fuel the move lower. With the break below the SPY 443 volatility trigger. And remember, at this point, thinking back to the Vanna model, market makers would be selling at this point, most likely, based on the Vanna model. Price decreases, implied volatility increases, and market makers are selling. Let's just take a look at VIX as somewhat of a proxy for implied volatility. And this is VIX for today, jumped sharply right about 215. With that sharp drop lower in the S&P 500. Let's go back and see what options traders are doing. Go back to Hero. So it looks like there was slight lead effect if we look at Hero starting at just after 2 p.m. started making lower highs and then dropped sharply as the index dropped. So great short setup here, focusing on options trades, larger traders with iceberg orders, smaller traders with stop orders, and watching order flow and potential levels for reactions. All signal a pretty good short setup. Let's take a look at Nasdaq. So in ES, larger traders were selling with iceberg orders, and it looks like larger traders are in here buying Nasdaq. Although the numbers are not nearly as significant in Nasdaq as they are in S&P 500. Talking about the rising blue line here, it's a little bit easier to see. Although there's one execution, 58 contracts. Let's go back and check Hero, see what options traders are doing in Nasdaq. Still trending lower for the day. A little bit of an uptick now. Back to ES. So about the same time as Nasdaq, aggressive buyers came in. Note the shift in order flow. Aggressive sellers. This sell stop order. And then sellers were exhausted after that, and aggressive buyers come in, shown by the green volume dots, and at no particular level, just around 44.76. So here's a potential level for reaction for Nasdaq at the 350 level, NQ 350, and also the QQQ 370 level that did act as resistance last week and also on Monday. Take one last look at Hero. Nasdaq. And again, Hero continues to trend lower. So that may not act as resistance. Maybe just a pullback. All right, my time is up. Take one last look at the S&P 500. Could be heading up to the SPY 443 level. All right, I want to thank everyone for watching. Thanks for your questions and comments. And I will see you tomorrow. Thanks again. Bye.